Welcome back to the Digital Asset Report. Crypto markets are ending the week under pressure. Bitcoin is trading near $63,000 and Ethereum is near $1,700. The Federal Reserve held rates steady and delivered a hawkish reset, with Kevin Warsh taking the podium in his first public comments as chair of the Fed. The dollar strengthened, yields moved higher, and crypto is once again trying to trade without a rate cut tailwind. Have a listen to what Fed Chair Kevin Warsh has to say on inflation.
We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability.
Warsh kept rates unchanged, but the bigger shift is how the Fed talks to markets. Warsh shortened the policy statement or move forward guidance and declined to submit his own dot plot projection, saying the Fed should not lock itself into a rate path when conditions are changing quickly. He also announced 5 new task forces covering Fed communications, the balance sheet, economic data, productivity and jobs, and the inflation framework. The most notable change is the data review. Warsh said the Fed needs to rely less on survey-based data and more on real-time information, private sector data practices, and AI-driven analytics tools to understand the economy as it's moving in the present day. In other news, stablecoin reserve management is moving into the center of Wall Street. Fidelity is launching the Fidelity Reserves Digital Fund, a money market fund built for stablecoin issuers and institutional investors. State Street launched its own stablecoin reserve fund earlier this week. Together, the moves show that stablecoins are becoming a cash management business for major asset management firms. As stablecoins grow, the cash and treasury reserves behind them are becoming a major new business for Wall Street. If stablecoins keep scaling towards payments, settlement, and institutional treasury use, the firms that manage the safest collateral could become core infrastructure. This is about treasury bills, repo markets, liquidity, compliance, and the balance sheet behind digital dollars. Meanwhile, the fight for U.S. crypto derivatives just escalated. CME Group says it will sue the CFTC after the agency approved perpetual futures on regulated U.S. platforms, including Coinbase and Kalshi. Perpetual futures are one of crypto's native market structures. They trade around the clock, do not expire, and can carry major leverage. CME says the approval process moved too fast. The CFTC says the lawsuit is frivolous. Either way, the offshore derivatives model is now colliding with the largest futures exchange in the world. CFTC Chair Mike Selig said he looks forward to bringing regulated perpetuals onshore to ensure the U.S. becomes the crypto capital of the world.
The CFTC hasn't approved a new type of derivative instrument for over a decade. I think it's incredibly exciting that we now have perpetuals in the lineup, and we're going to continue to engage with the exchanges on bringing some more of these products to market. So this is just the beginning. As I said at the outset, it's not the end. We expect to see more of these products, and we'll continue to monitor the market and make sure that investors are protected, but we're also seeing innovation in our markets. And I'm very excited to have conversations with the SEC about equity, perpetuals, and other types of products. So I think it's a time to be excited. It's certainly a time to be building here in the United States, and we'll continue to make sure that the United States is the crypto capital of the world.
On the tokenization front, Moody's is pushing credit ratings directly on-chain through Solana in partnership with Alpha Ledger. Tokenized assets need ratings, prices, compliance data, and investor reporting in the same workflow. And Moody's is moving machine-readable ratings onto public blockchain rails is exactly the kind of infrastructure institutions need before tokenized bonds can move from pilots to real markets. Blockchain.com is also expanding tokenized equities with Ondo Finance. The platform added 173 tokenized stocks and ETFs, bringing its catalog to more than 430 offerings across Ethereum, Solana, and BNB chain. Tokenized equities are still early, but the product race is getting more serious, especially outside the US. In mining, Hive Digital shares jumped after the company announced a $220 million 3-year GPU cloud contract with Bell Canada and Cohere. It's yet another sign that Bitcoin miners are using their power access and data center footprints to chase higher margin AI computing revenue while mining economics stay under pressure. On the regulatory front, Malta's financial regulator is asking whether parts of DeFi should fall under MiCA. The focus is on admin keys, concentrated governance, upgrade rights, and control over the user interfaces. That is the question regulators keep returning to. If someone can pause it, upgrade it, or steer it, How decentralized is it really? And in Europe, Binance is reportedly set to lose permission to serve EU clients next month if its MiCA license application in Greece is rejected. For Binance, this is a major distribution risk. For the rest of the market, it's a reminder that regulatory clarity cuts both ways. Licensed firms gain access, unlicensed firms can lose entire regions almost overnight. So the weekends with a familiar split screen, prices are weak from the hawkish Fed, the conversations around the infrastructure are getting more serious, stablecoin reserves, credit ratings, tokenized stocks, perpetual futures, AI infrastructure, and European licensing are all moving at once. The market is still searching for a bottom, but the infrastructure race is not slowing down. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.